I'm going to quote Mr. Winkler. When President Obama was elected in November 2008, the U.S. economy was shrinking at a rate unmatched since World War II. In the 7 years between then and his final State of the Union address, which takes place tonight, global investors have enjoyed stellar results from the rapidly expanding Obama economy and central bank intervention.
There was a little of that.
The Fed always helps, and they certainly contributed to this. But the real story here is that if anyone told you 7 years ago that the American economy, and in particular American companies, would outperform their global peers in 2015 by a considerable margin, in fact, do so better than they've done at any time, really in the 21st century. You have to go back to 2001. That would have been sort of laughable.
Well,
People
then
would have
why
dismissed it.
those analysts who say momentum is now out of the market, now that we're looking back at fundamentals, companies aren't doing so well. Look at where they're trading. Look at what earnings were third quarter last year.
That's actually misleading because, as I said, if you think about what Jim Press said yesterday to you about where Toyota is, largest car maker in the world, guess what market they're excited about? The U.S. market. The fact is that when you look at America today and American industry today, 10 of the world's largest companies in the world, 10 out of 10, are American. You have to go back decades to find something comparable to that. That doesn't happen by accident. It happens because there's a lot of activity. The three most important industries, the ones that have outperformed in the past 7 years, consumer discretionary companies, technology, and finance. All of those things are pillars of an economy that is doing well.
Matt, what do you make of timing? Governor Carney came over to the UK and his timing was amazing. We were talking at the time before he came under Mervyn King. They were voting for more QE. Some of the policymakers were at the Bank of England, and it was just the right time where things just started to go higher. Things just turned out right. How much is luck a factor in the Obama economy when you look at the fact that actually he stepped into things where the market was actually just bottoming out 3 months later, and also shale was taking off? Because it's very easy to forget. The balance sheet of the Federal Reserve doubled. Output in terms of energy, oil production also doubled. They're two huge factors that he had nothing to do with.
Okay, so I'll be the first to say better lucky than smart. And I always have believed that. Having said that, you make your own luck. And let's go back to the first year of the Obama administration. There were two things that were done that were signature achievements of the administration. One, the rescue of the U.S. auto industry, which was very controversial at the time, turned out to be a very good investment when you look at where we are today. Last year, American automobile sales were at a record. Okay, the second thing was the stress tests. Okay, getting the financial system in order. At the time, April of 2009, people were very skeptical in the financial industry in particular about the stress tests. It turns out, once they were imposed and they succeeded, the confidence in the American financial system began, and you saw the rally, by the way, in American stocks begin at the bottom on March 2009. It's been continued ever since.
Julie, you want to show us something about unemployment there from the Bloomberg?
Yes, exactly. This is, if you look at another sort of marker of the progress that we've made in the economy, you see the jobless rate, of course, is something that the administration has pointed to as a source of pride. So you see the previous comparable cut in the jobless rate happening in 1989, and now you see the cut in half that we've had since 2009 as we recovered from the recession and from the financial crisis.
Great, thanks. So, Matt, I just want to push you a little bit. This is, you're great as the optimist, as Stephanie says.
That's a great idea. It is a great idea of all the guests to push.
Yeah, exactly.
Push our editor-in-chief from Emeritus.
But some might say, okay, terrific, great track record for 8 years, but we didn't really build for the future, that we didn't take care of infrastructure, that the first stimulus bill was really inefficient, that we didn't take care of long-term entitlements problems. And so we totally have had a great 8 years, but looking forward, we've bought ourselves a whole lot of trouble for the next 10, 15 years.
I think all of that is true, but I would say that a couple things have happened in the past 7 years that have put the United States economy in a very good position to take advantage of things that you're talking about, like infrastructure. One, the budget deficit declined from 10.1% to 2.4%. Okay, that is the biggest favorable reversal in at least 50 years. We've never seen a favorable reversal like that for the budget deficit. And if you recall, in 2009, 2010, 2011, that was a big topic of concern. Okay, so that's one big obstacle removed from the table. The second thing is the unemployment rate is 5%, okay? And it did come down from 10.1%, and it's going to come down even more. And so people are going back to work. Finally, interest rates are very, very low. These are the best rates in a generation or two for people to borrow. So if you want to build bridges and tunnels and all that sort of stuff, this is as good a time as ever you're going to get. You had somebody on Bloomberg television earlier this morning, Adam Posen, talking about now is as good a time as any to invest in infrastructure. It's exactly what government should do. That's actually a growing consensus around the world.